In this video, I'm going to be talking about and attempting to value the company Duolingo. For those that don't know, it's a language learning app that's heavily gamified. First, I will break down the company, show you how it makes its money and how it spends it. I'll then talk about its future. I'll look at the historical trend for its growth and attempt to model it going forward. I'll do something similar for its costs and try and estimate its future margins. Hopefully that'll build us a story that we can put into some numbers into a discounted cash flow valuation model. Currently, my model gives me a price target of $309, which is 110% upside from its current trading price. This has led me to take a starting position. I have a few reservations that are holding me back from making my position more substantial. You'll see what those are as I tell my story about the company. Finally, for the voyeurs amongst you, I'll give you a snapshot of my current portfolio. Before we break down Duolingo's revenue, it all starts with users. Currently, Duolingo have 135 million monthly active users. 9% of them are paid subscribers, and they make up 83.6% of the revenue. The other 91% are free users, but they will be seeing ads. Those ads generate 7.9% of the revenue. As a native English speaker, I think of Duolingo as a place to learn Spanish or Chinese, but the most common language to learn is English, and they provide English tests which are recognized by most colleges. That generates a further 4.2% of revenue. Then you have some in-app purchases, which is generated by all users, and that's a 4.1%. But my favorite piece of revenue, I was surprised to learn that they own a restaurant near their headquarters, and that generates an admittedly negligible 0.2%. That's an overview of how they make their money. Now let's see how they spend it. For cost of goods, that takes about 28% of their revenue. This would be made up of payments to Google and Apple for a cut of their subscriptions that go through their app store, and of course data center hosting costs. Next, we have research and development. This makes up around 30%. This would be designers, engineers, developers working on new courses and adding new features. The next biggest cost is general and administrative. That's around 17%. This is management and admin staff. Then finally, for operating costs at least, we have marketing and sales at 12%. This is mostly advertising costs. Putting all that together, we get 87% of revenue is spent on these costs. That leaves us 13%, which is our EBIT margin. Usually, I would then add in finance expenses, but in Duolingo's case, they have quite a large cash pile, so they're actually earning an extra 4% onto their revenue. So I'll call that minus 4% costs. Then, of course, they have to pay tax on all this, but they have not been a profitable company for all that long, so we don't have great numbers on their effective tax rate. Looking at similar companies, we're probably looking at 15 to 20%. So to be safe, I will go to the high end and we'll call it 20% for now. That's enough for an overview. Let's try and go a bit deeper. First, let's look at revenue again, but this time we're going to look at the historical trend and make some guesses about the future. Here is the quarterly revenue over the last 5 years along with its growth rate. It's quite impressive. While you could say its growth has been falling off somewhat, it's mostly maintained around 40% growth for at least 4 years now. That's quite the achievement. But before we pencil in 40% growth in our model, let's have a look at the graph for monthly active users. Once again, it's up and to the right. But if we look at the growth rate, we can see a much more worrying picture. Growth has been falling quite steadily over the last 3 years, pretty much 10% every year. If that continues for the next 2 years, we won't have any user growth left. This is the first red flag I have for Duolingo. In my opinion, it's likely the reason the market has been selling off for most of the last year. So what explains this disconnect between user growth and revenue growth? This chart does. We can see on this chart the average revenue per monthly active user, and you can see that is steadily been increasing. So while they're not getting as many users, they're monetizing those users at a higher rate. Now, many things go into this ARPU number. First and foremost is how many monthly active users are on a subscription. And that's steadily been rising in recent years up to currently stands at around 9%. On top of that, the last couple of years, they've added a higher subscription tier, Duolingo Max, which should push up the ARPU number. And then you do have just plain old price increases due to their pricing power. Now, countering some of this is the changing geographical mix they have, which is actually a drag on ARPU. On the most recent earnings call, management have started to acknowledge this fall in monthly active users and have talked about their goal to revitalize growth, even if it means short-term hits to their revenue growth. My translation is they're going to take their foot off the gas of increasing ARPU in the hopes of boosting monthly active users. Now, that's the past. What's my guesstimate for future revenue? To do that, I'm going to have to make a bit of a model within a model. I've looked at 5 different aspects that will affect revenue growth and made some assumptions for each of them. First of all, user growth. I predict management's renewed focus on increasing this metric should at the very least stabilize it for a few years, but ultimately the trend downwards has to continue. There's only so many people in the world. You can see the numbers I've put in here. This growth would equate to around 400 million people. That's 5% of the earth actively using Duolingo. That might seem aggressive, but remember, they're already at around 135 million. And they point out that there's 2 billion people in the world currently learning languages. So it is aggressive, but it is achievable. Next, we have subscriber penetration. It's steadily been increasing in recent years, but I expect that to stop as management focus on user growth. But I do see it returning as management hopefully once again shift back as the company matures and user growth falls. For a terminal rate, I've put in 0%. Next, we have product mix. This is how many of their subscribers are on higher revenue tiers like Max or the family plan. This is hard to know. It's hard to know these numbers from the outside, but it does seem that video calls are doing quite well. And I expect that to continue at least in the short term before flattening out. And then we'll give them some credit for optimizing even more when user growth starts to slow as they mature. For the geographical mix, nearly half of their revenue comes from the US. And while the US is still growing, it's not growing nearly as much as the rest of the world. And outside the US, subscription rates can be a lot lower. For example, in India, they pay nearly 75% less. I've made a few assumptions that on average, the rest of the world pay 50% less than the US, and that the rest of the world will continue to increase their revenue mix at the historical trend rate. Putting all that together, at a rough guess, I'm looking at a 3% hit to revenue every year. And for the terminal rate, I'll assume that they hit an equilibrium and it has 0% effect. The next metric I'm thinking about is inflation, both natural and through Duolingo's increasing of prices if they feel they have pricing power. I'm going to assume the US rate is about 2%, and for the rest of the world, the inflation rate is about 4%. Given that the rest of the world is growing in the mix of revenues a lot faster, it will start to dominate over time. Then as user growth starts to slow, I'm going to make the assumption that management will start to squeeze the prices up as much as they can and give them a bit of a boost near the back half of these 8 years. Then I'll take the terminal rate at 3%. Combining all of these, I get a general story for revenue. It will fall from the current 40%, but it will stay in a range of about 20% for the next 5 or 6 years before, again, I have it trailing off to a terminal rate of 5%. Now that we have revenue estimates, let's start talking about their costs. What kind of margins can we expect from Duolingo in the future? Here's a graph of the last 5 years for Duolingo's main costs. If we start off with sales and marketing, the red line, you can see it's steadily been falling over the years, but you could argue it has started to somewhat stabilize. Of course, I can see a situation where it falls even more due to economics of scale, but I can also foresee the situation where it increases due to increased marketing in an attempt to stimulate growth. I'm going to model it as staying relatively flat going forward. Next up, we have general and administrative costs, the yellow line. This one, you would expect this to steadily fall over time. As the company gets twice as big, it doesn't need twice the executive management or twice the admin staff. So there's always going to be economics of scale in this one. I'm going to model this to continue to fall to a terminal rate of 12%. The big expense is the blue line. That's research and development. They see themselves as an innovative company, always trying new things, and that innovation costs. But I'm going to predict a general reduction in this research and development costs as the company matures. I'm going to guide the research and development to fall down to a terminal rate of 23%. Once again, you could make a very good case for this to be higher or lower than I've put in here. Next, we have the green line. That's their interest income. It's here because usually this is a cost, the financing cost on a company's debt. In Duolingo's case, they have quite a bit of cash on hand, so it's actually earning them a lot of interest, 4% compared to their revenue. It's fair to assume that this will disappear over the years, hopefully through buybacks or perhaps dividends, but maybe even an acquisition or two. Whatever the case, I'm going to model it as falling off to 0% into the future. Now, I don't have CapEx on here because in my model, I capitalize research and development. And so it was a bit of a mess to put on it. I wasn't quite sure how to represent it. It's quite small. It's around 3%, and it's mostly cancelled out by depreciation. But just thinking about it in the last few minutes, I really should have just put it up there as CapEx minus depreciation and called it a reinvestment cost. And it would only be about 1%, so it would be quite small on this graph. Now, I've mentioned the company maturing a few times, so I think it's worth taking a couple of minutes out to talk about my second big concern for the stock's future. For those that don't know, this is Aswath Damodaran. He teaches valuation at NUI and puts most of his lectures on YouTube. I cannot recommend him enough as a resource. I bring him up because he often talks about the corporate life cycle. If you're interested, I'll link a video in the description below. What I took away from it in regard to Duolingo is there's different stages to a company's life. And for each stage, you do not necessarily want the same type of manager. The manager that's good at high growth is not necessarily good when a company becomes mature. Duolingo's founder and CEO, Luis von Ahn, has proven that he has what it takes to start up a company and to shepherd it into its high growth phase. My concern is, as the company reaches a maturity, will he be willing to accept that growth has come to an end and start to maximize margins? Not all founders are willing or able to do that, and it could derail the company and, of course, my model. In his defense, Duolingo has faced slowing user growth for a number of years now, and in that time, they have increased revenue and decreased costs. Exactly what you'd hope to see in management of a maturing company. But honestly, I still do not know this management well enough to have full confidence in them through that transition. That should give you a good idea of my views on the company. I next want to put that story into a proper model. My actual model is multiple tabs large and quite a mess, as you can see from this glimpse I'm putting up. And it's not really good for conveying information on YouTube. So I have broken it down, or at least the main concepts of it, into this more digestible format. I have the next year, then 4 years out, and then a terminal value for revenue growth and free cash flow margins. After I estimate free cash flow, I then discount them to the present value. My discount rate starts at 10% and falls off to a more historical 8% into the future. I add up all those discounted cash flows for the next 8 years. They don't really amount to much, about 2 billion. In a growing company, the lion's share of value comes from the terminal value. And it's the same here in Duolingo. I get a terminal value of 12 billion. I then adjust that for net debt. Again, in Duolingo's case, they don't have debt, they actually have cash. So it adds to the value and it gets us up to a total value of 15.4 billion. When we divide that by the diluted outstanding shares, we get a valuation of $309, which is an upside of 110% at the current valuation. Now let's talk about why this valuation might be wrong. In fact, I would be shocked if it turned out exactly right. I've already talked about my two main concerns for the company. First, user growth is slowing fast. Can they stabilize that or even turn it around? And second, will management handle the inevitable transition to being a mature company? Another concern I would have is competition. Of course, that's something every company needs to keep an eye on. Duolingo have such high growth in countries like China and India. I would be somewhat concerned if a local company tried to compete with them, especially if a government might help that local company by restricting Duolingo in some way. Next, I'd probably get thrown off YouTube if I didn't at least mention AI once. There has been a lot of talk that Duolingo's falling price is due to a risk from AI. Personally, I'm not so convinced. I think the fall in price can be explained by the accelerated fall in user numbers. While I don't see the current form of AI hurting Duolingo's business, I do accept that any future competition could leverage AI to generate courses at very little cost and get them up to a similar scale in course content to Duolingo. They won't be able to get to a similar scale in user numbers though, and those users matter. Duolingo, that is, can leverage those users to do A/B testing on them, to optimize their course and features, to hopefully keep it ahead of competition. Of course, any competition that gets even close to Duolingo will mean a pressure on Duolingo's margins. My next big concern I have, and you should definitely share, due to my valuation being so heavily weighted to the terminal value, even a slight change in my assumptions will drastically change the outcome, either up or down. And then also, remember, I am just a random YouTuber, a foolish investor. You need to do your own work, come to your own conclusions, so you can have confidence in your own valuation. Still, my best guess tells me that this stock is worth $309. I have an opportunity to buy it at $150. So I'm going to pick up a starter position. I'll be looking out for the user growth numbers to stabilize or even increase above 20% before I take a larger position. But I also want to hear more from management just to build up my own confidence in their ability to manage Duolingo through the inevitable transition to being a mature company. So here it is added to my portfolio. I did have some extra cash. I still have some extra cash. So I didn't have to start selling off any of my other positions to make room for it. It's such a small position. It doesn't even show up. Its name doesn't even show up. That is, you can see it there. It's the wedge that's sticking up slightly. The other change I made since my last video is I added to YouGov, and that's the stock I actually made my last video about. Before I finish up, I'd like to give a bit of a shout out to another YouTuber, Joseph Carlson. He's done a couple of videos on Duolingo and I believe bought a position 5 months ago. I'll link to the video below. I seen that video, I liked what I heard, I put it on my to-do list. Now it took me a good few months to get around to it, but I am happy to join him as an investor. While he doesn't go into enough details for my liking, and he also generally avoids stocks outside the US, he is well worth a watch. Okay, that's it from me. I would love your feedback on my take on Duolingo. And thank you for watching and have a great day.